Good morning, everyone. This is Daily Trading Analysis with the weekly recap for this week, the first week of April, in which we in the Nasdaq ended up being in the red on the weekly, but Friday a little bit went higher due to the non-farm payrolls and average hourly earnings that we got. But we are going to review first day by day the economic data, and later on we are going to perform deep technical analysis to really see where we are in higher time frames, and also trying to perform forecasts in the Nasdaq align with other markets like the dollar and yields that are skyrocketing. So be really careful, because this week has been a change in sentiment and we can continue in lower in the next weeks ahead. First, on Monday, we got ISM manufacturing PMI, and we got a little bit of uptick. We were at 47 on the manufacturing performance. We were expecting a little bit of tick higher, but we got more than expected, 50, and that means expansion to the upside. And that's really bad for inflation, but at the same time is good for the economy. So we started the week with a little bit of turbulence and markets going lower a bit. On Tuesday, we got jolts that came a little bit higher than expected, 8,075,000. We're expecting basically that. And factory orders were the big surprise, 1.4%. We were in the negative previously, and we were obviously expecting an uptick, but factory orders means more production, more orders, more demand, more inflation. And on Tuesday, it started the Fed speakings throughout all the week. They started saying that they think they need to be patient, they need to see more progress in inflation, and markets were waiting for Wednesday, in which the ADP employment and ISM services came out. The first sign of really strong payrolls were on the employment change, 184 from the 155, and we were expecting even lower. So this was a miss. Payrolls on the private sector skyrocketed, but then the ISM services PMI gave a little bit of relief. Services is the one of the sticky parts of inflation. So basically, we were from 52 to 51.4. We were expecting even an uptick. So this is certainly a check mark. And then Jerome Powell said that he expects later on the year rate cuts, but at the same time, the Feds are also pushing towards the narrative of higher for longer. It wasn't until Thursday when all these initial claims came out, better than expected. But look at all these, and also Cascari. Cascari said on Thursday, and also Barkin and Goldsby, they said that maybe the Fed doesn't need to cut any rates this year due to the strength of the economy and the labor market. The markets tanked after this. And that was on Friday when we expected payrolls to go lower, 200,000 from the 270, and we got a big push, 300,000. Employment rate ticked lower, but I think the markets took these average hourly earnings as the bigger picture. Year over year, we were down ticking from 4.3 to 4.1. And we take a closer look from the hourly earnings, average hourly earnings year over year, we've been in an downtrend for almost a year. And that means that these average hourly earnings are showing that the wage growth, it's going lower. That means less money on the people and less inflation, less capability to pay higher prices. And I think that's why NFP were a miss totally, but I think the hourly earnings talk and show another narrative behind the scenes that are showing that the wage growth is actually declining. So where are we in terms of interest rates path? So this was the first rate cut on June, and this is going lower and lower and lower. We were at 65 at some point, now we're at 50, 50 basically. from the interest rate cut to hold. And if we don't cut, we are basically moving towards this, then I think it's still applicable that we are going to cut on September and also on December, November. So I think two rate cuts, it's what the market is starting to price in. That's why we are slowly pulling back with a lot of volatility implied, but we are still moving towards that target. Let's now start with the technical analysis with the Nasdaq weekly chart, because if you have been getting travel trading all this past month, this is why. Look at this weekly. This weekly chart is showing 1, 2, 3, 4, 5, and 6 weeks of pain, of not moving, of basically playing sideways. And if we check the daily, I mean, look at this. We started the week basically here. This was the first sign of weakness. This candle was the sell-off of Qashqai, and then on Friday, with the average earnings and NFP, we bottomed a bit. That's why the weekly checks out a little bit of a week down, buying somehow at the end of the week, but we are still in a huge range. Look at this. We are not leaving behind, excuse me, this fair value gap is still holding. So let's check that out. I don't know why it's not there. This daily fair value gap is still holding. There was a lot of liquidation on the, look at this drop, on the Qashqai and no right cuts thing. So that was a pretty bad fall from highs to lows. That was 500 points. And at some point on Friday, we were slowly generating liquidity. And look at this, because this was pretty damn interesting. Look at what we did right at news. Yes, just so we were during overnight on Friday, just slowly grinding higher. And all this, look at what I did. All this is liquidity being generated. Liquidity. What we did, NFP, look at how we took out all sell side liquidity and also from the lows of Thursday. And then look at this fair value gap. It's slowly pulling back, and then in the open, pushing and pushing and pushing and pushing. So we ended up on Friday quite green, 1.24, but as always, we have to see this in higher time frame context. And if we take the fifth retracement from the highs on Thursday to the lows on Thursday, all this range, we are basically at the golden pocket below that. So these inverse were run through, but we are still in a placement in which we can expect price to rebalance as we were doing here and then continue lower. So the open on Monday is going to be really interesting. On the 1 hour chart, we don't have a fair value gap. We have a huge fair value gap here. We got that also here on Thursday, but then the Fed spoke and we just got destroyed. We can obviously remove that. We can remove all this liquidity. We are just going to get rid of everything and try to see where the price might be going. The price didn't take this low down here, so I'm leaning towards a little bit of bullish action. So the 30-minute chart offers us a pivot up here and a 30-minute gap here. Let's see if the 15-minute can provide us with something. I think this is, sorry, not that one. This is still in play. This 15-minute is the first inverse that we got. And basically, the fifth retracement is going to provide us with context towards a push to the inverse and then run through, or we just disinflate and go towards the downside, as confirming that this was just a retracement for more shorts to be added, a lower high and continuation to the downside. So this 15-minute for me is key for next week. The same way the weekly chart also provided us, we got a really narrow week last week, but this week it's quite expanded that. So let's adjust our weekly ranges, because that weekly was basically more context, but this week we don't have anything. So to the upside, we are going to see this liquidity, buy side liquidity, and then we might see this run through. This might be a target. And to the downside, we are still looking towards where we took that one. That was some sneaky manipulation. And we are still going to be able to see that if we go lower. Excuse me. So basically, on the 50-minute chart, there's no bullish fair value gap apart from this one. That is really narrow. I don't think we are going to see a lot of manipulation throughout this. Remove all this, and we just have this 15-minute. Look at this price action. Was quite efficient when delivering price, because it was just pulling back, pulling back, pulling back, pulling back. So as there's no imbalance here, I'm leaning towards more for a push towards this buy side liquidity, taking this pivot and then continue higher to really destroy all these shorts. It all depends on the overnight price action. So what are we seeing in the individual tech stocks? Where we are seeing indecision and weakness. Apple is just down here at 170. Microsoft is pushing towards that huge red candle, but still sideways. Tesla at the bottom. Amazon trying to push November 2021. This was the all-time highs. So I think Amazon, it's trying to do things like that. It's trying to push all-time highs, and it's so near for them. It's so near for them to be at all-time highs that, I mean, it's 188. I think Amazon might push. Google, it's also trying to hold these new highs. It tried to go to all-time highs again, but it couldn't. Nvidia pulling back now below the 20-day moving average, the purple, and Meta was basically skyrocketing. It tried for all-time highs and then it failed, but it's super bullish, super bullish Meta. So we have a little bit of mix of Meta being strong, Amazon being strong, and Microsoft being strong at all-time highs, and then we have Apple, Google pulling back, Nvidia pulling back, and small caps are also playing sideways. So where are other factors that might provide us with more context and more advantage towards next week? The dollar is being rejected like crazy. I think the push was pretty big on NFP, but then look at all this retracement. This is why the Nasdaq initially didn't like the news, but then look at this drop. So that's why I'm leaning towards a little bit of bullish sentiment on the average hourly earnings year over year that continue declining. But the concerning parts are the yields. The 2-year yield, it's again pushing. And what is this? This is a big trend for a breakout on the 2-year yield. 4.7, it's quite crazy on the 2-year yield. On the 10-year yield, also 2% on Friday, 4.4%. And apart from that, look at the interest rate futures up here. This is May in green, June 0.67 in the green, July 5.2, and September, 5% with 1.21 on the green on Friday. So look at this. We are continue pushing higher. This is September, by the way. This means no rate cuts because September is still at 5%. So all the interest rate futures were pricing in higher for longer. And at the same time, Nasdaq and stocks were pushing higher. Be really careful because dollar and yields and interest rate futures are showing another kind of narrative. This is the dollar, by the way, rejecting this. Another kind of narrative. Treasuries were in the red and are continuing lower. So despite the fact that, look at this channel, I mean, the trend is until we do something like this, the treasuries are not liking the forecast on interest rates. The dollar and yields are pushing toward higher for longer. But at the same time, we rally up 1.24% on the Nasdaq, 3% on Meta, Nvidia 2%. Next Friday, banks are starting the earnings again. And I think this is not only about higher for longer, but this is for earnings. Earnings play, I think that investors think that the stocks are going to perform well. That's why they continue buying and buying and buying, despite the divergences with the dollar and other kind of assets. Look at gold. Gold, it's skyrocketing towards all-time highs at 2,400. Wow. And if we check energy, it's even crazier. Look at crude oil. You cannot ignore the rally in crude oil. Energy sector is just booming. Booming. And if we check other sectors and the performance, this is the 5-day, this is this week performance. Energy, materials, industrials, XLK minus 0 in the negative. Consumer discretionary minus 2.75. And if we go to the 2-week performance, the 10-day performance, it's still the same narrative. Look at energy, the first one, 6%, utilities, 2%, materials in the positive, and where we are in technology, minus 1.62, and consumer discretionary, minus 3%. There's a rotation from, obviously, from the technology, consumer, healthcare, staples, to all this rally on energy, on materials, on utilities. There's a clear rotation 2 weeks ago. And that's why we are on the red and we are playing sideways and a little bit of weakness building up more and more on technology. So you have to really be careful and see all these things because you cannot ignore how all these prices on energy and materials and utilities and, and commodities, how these prices will affect inflation. The RSP, the equal weighted ETF, obviously pulled back a lot. It made an all-time highs, and then we are caged in this box. And momentum build up when on Friday we got 5% on the percentage of stocks above the 20-day moving average. But the overall trend, the percentage of stocks above the 200, which means bullish trend, is still up here. It's 60, it's quite well, but I don't think we are out of the woods. We are seeing other markets rallying big time, pushing higher in a big trend like energy and gold and metals and commodities overall that are divergence with how the stocks and the equities are playing. And remember that dollar and yields are also pushing higher. September interest rate futures pushed up 1.21% on Friday to 5%. That's pretty bad. So as I was saying, let's go to the 30-minute chart. This is my expectation. This is my chart setup for the start of next week on Monday, I would like to see if we go below this 15-minute or if we start pushing this 15-minute fair value gap. If we start going higher and start building up here, I think the next target is this and the cash carry sell-off. That's the possibility number one, which I think it's my preferred one because that will mean I can play along 18,300s to 500s. So there's a lot of opportunity up here. But at the same time, if we start seeing trying to go higher and then move lower, we break this 15-minute and we lean towards the downside and we start seeing this zone again, I think this play, it's invalidated, and I think the target would be this one. And that would mean that from here to here, there's also 200 points. If you are indecisive, that's because basically we are, let me draw a box, we are in the middle of the range, practically. So we can go either way, but we have to be patient and react to what is happening on the price action. That's why on Monday, I will see in the overnight, and let's see if we, with these references, with this inverse, and with this bullish fair value gap, let's see if the imbalance goes towards the longs or towards the shorts. That's as simple as that. And then when we have an anchor, when we have some kind of level that keeps holding or being rejected, then we can build our position. That's how I trade. And I think that's all from my side. As always, thank you for your time. If you found these weekly recap videos useful, please support the channel, subscribe to the channel. I upload these kind of videos on a weekly basis on Saturdays to review the week and to be prepared for next week by following other markets, other assets. And that's why I've been pretty cautious. Dollar, yields, interest rate futures, and price of commodities are skyrocketing. And just like that, that could affect inflation and really push lower the equities to really the pullback that all we are needed. Equities and stocks are going higher with the optimism on earnings, and that might be not enough for them to hold. So pretty difficult time to trade. Just watch the weekly because we are stuck in this range. So be really careful, and as always, discipline, patience, and risk management are key for your success. Stay safe, everyone. Have a nice weekend, and see you on Monday.